I'm recording, guys. Recording started. It's about 8:40. So you guys will have this recording. I'll post it in your trade room. All right, nothing here on the pound. And let me take a look here. Anything else? Let me go briefly over that Forex Factory thing one more time. All right, sorry, I actually started talking without recording, so I wanted to briefly go over this website real quick. It's forexfactory.com. Has not using it for anything really to Forex, really. It's really all I want is the economic calendar. You'll see if you just click calendar right at the top there. Hold on one second. All right, so it brings you up, say it started on Sunday night, and it goes all the way to today. And if you're a swing trader or a day trader, you're going to want to know what economic reports are coming out. And it's important because it'll affect the trades that you're getting into or that you're in. So here's today. It's Friday, September 30th. Here's the list of currencies and the markets that will affect. You'll notice there's yellow, beige, and red. Yellow and beige are more minor impact on the market. The red is clearly going to be something market moving. So you'll see here on 4:30 a.m. there was a British pound report coming out. It didn't do too much. The market, the pound came down a little bit, but not into anything I want to trade. It looks like at 8:30 there's an announcement on the Canadian dollar. I'll look at that real quick. And then for the U.S., it looks like there's some announcements just came out too, but they were all minor. And another one at 9:45. None of it market moving or earth shattering. So real quick, I'll look at the Canadian dollar, and then I will turn it over to Mr. Firestone. And let's see here, Canadian dollar. Up on the daily. Nope. Nice strong candle on the Canadian dollar. This is the Canadian dollar futures, not the USD CAD. I can look at that at some point, but let's stick with this for now. This isn't my kind of zone, but we could look to see if there's something to short in here. This is reacting too much. This is too much slop for me to take a trade on it, but there's a nice move away from here. It's something I'll keep my eye on just to watch, just for analysis, but there's no trade setup in this. And let me go check the S&P, and then Mitch, I hope you're ready. I'll turn things over to you. All right, yeah, the S&P backed off a little bit on its way to that zone. So probably just going to trade range bound for this. You will see, let me show you one more thing before I turn this over to Mitch. See how it's just trading in this range, kind of just trading sideways, but then we have this zone up here. I'm a big fan of that. So if price, as long as it's not basing a lot in this area, as long as it gets in here on a straight shot and I have some potential real clear risk reward, this could shape up to be a really nice trade. So we'll see, but I guess it's going to be the open will really determine it and how we enter the zone. So I'll keep an eye on this while Mitch is kind of going into just a brief overview of how we look at the market and what our trades look like. And then I'll take it back and we'll look at a couple of trades. Mitch, when the stock market's rolling, is going to show us some cheap stocks to trade, which is something we've been working on for the last couple weeks. And I will be back with you. Just give me 1 second. And there we are. Mitch, mic's coming off. Hey, Mitch, can you hear me?
Good morning. Can you guys hear me?
Hang on 1 second. Throw okay in if you guys can hear Mitch, please.
Good morning. Good morning. You guys hear me?
They can hear you, sir. I'm going to make you a presenter so you'll be able to see the questions and everything.
All right.
Give me
Cool.
1 second here. Make presenter. All right. Over to you, sir.
All right, bear with me 1 second here. Let me just get my share my screen here, and we'll be in business here. Hang on a second, please. All righty. Good morning, everybody. By way of introduction, my name is Mitch Firestone. I'm really not going to repeat what Ryan said because basically my path is pretty much parallel with his. I'm a full-time trader. I've been doing this for about making a living at this for about 5 years. Ryan and I basically trade the same manner, pretty much based on what's referred to as our price imbalance strategy. And what that essentially entails is looking for points where there are sudden moves in the market, which essentially is representative of points of price imbalance where there's an exhaustion of buyers and sellers. Just as an example, here is a trade that I very recently had. It was off of a daily chart, but the principles are all the same. And this was just something where I had been looking at a potential options trade. But basically, I'm looking at simply looking at the price action and looking for points where, in this case, noticing that there's a sudden exhaustion of sellers here. So basically, and that's what created this huge up move here, where there were presumably willing buyers that wanted to buy at this point, but then essentially the sellers had disappeared in this price zone. There was this sudden energetic long move out of this level, and this is indicative that presumably there were buyers that was essentially left in the lurch and actually wanted to buy but never got the opportunity to. So the theory is when price returns to this level, we're expecting to see some sort of pop, a reversal out of this level, essentially some repeat of this behavior. That's the thing that we are looking for. That's the thing that Ryan was showing you before on the S&P, except of course in reverse, looking in reverse where there was a supply, basically an area of downward price imbalance. This is an area of upward price imbalance here. So that's essentially what we are looking for. You can ignore all this stuff on the chart here. In fact, that's a mistake. This is a bull put short. If you know anything here about options. So at any rate, this is what I was looking for. So when price returns to this level, I expect to see a pop out of here. And so this is the chart again. And notice now when it came back to this level, it hit into this level, dug in a little, and started heading out. And this is essentially what we're looking for in a chart. And then the follow-up, as basically as it continued, was we ended up with a point where, sorry, just machine's having a little slow movement here. And then as price continued to move, that ended up as the result. This is the sole principle of essentially how we trade. And again, it's because there was an exhaustion of sellers here. Presumably, there was still buyers that wanted to buy at this level. This is really economics 101. This is what's referred to as supply and demand, and that goes for whether you're buying or selling corn or electronics or real estate. It's really supply and demand. It's economics 101. And in this case, essentially, all the supply disappeared at this level, and all you had left was demand. And at that point, since price ended up running, essentially the buyers ran up the price chart in order to find willing sellers that were actually willing to sell. And that's what created the updraft. And when price returned to this level, there was presumably that demand imbalance that was still left at the yellow box, and then that's where it continued up. So essentially, that's essentially what we're looking for. On a date, and this works on a day trade basis. This works on it works intraday. Um, Here is something that I had yesterday. And again, it's going to be the same exact principle here. Right here was an area where there was an exhaustion, in this case an exhaustion of buyers. Price dropped out of this suddenly, it wicked back in, and then it continued down in a pretty healthy manner. The theory again being once price returns to this level, this would represent a high probability trade opportunity here. These lines here just represent simply risk and reward. This isn't the level of risk that I have in the trade, which is essentially the depth of this level plus a few extra pennies for good luck. So in this case, I had about a 27 cents worth of risk. This decides where I'm going to get stopped at if I'm wrong. But when price returns to this level, I'm expecting to see it drop out from there. At the open, this thing came up suddenly, basically drove into the level and immediately came down. This is a 60-minute chart, and I basically just kind of pretty much sat in this trade pretty much most of the day. I took some of it off midway and continued and held it through a fair part of the day. And that's what the trade ended up looking like. I basically got out of this around, I didn't quite catch the entire move, but I got out about 200%. So that's, again, the theory of what we're looking for. And in this case, this was simply an exhaustion of buyers here, and essentially where demand disappeared, and essentially all you had was a supply of shares up at this level. And so when it returned, that's what you got, essentially some semblance of a repeat of that behavior. And there's obviously some rules that go along and how you qualify these levels and all that kind of stuff. So it's not like every single time you see a sudden exhaustive move, it means automatically there's a trade setup. But your eye does get drawn to that. And then there's about a half a dozen qualifiers that we go through in order to figure out whether or not something that looks interesting on a chart actually becomes a qualified quality setup. So anyway, that's kind of what that's kind of the theory of how we trade in a nutshell. One of the things that I am going to show you here is and Ryan went through one element of his morning routine, and I'm going to kind of elaborate on some of that. So let me show you a couple of things that I look at, and I think you'll find this, and this is particularly geared towards stock trading. One of the things that I care about when I'm looking at the market is not only how are individual stocks moving, but essentially how are things moving relative to each other. And so one of the things that I like to look at are basically following what the various sectors are doing. There are the 9 core sectors that everyone's probably familiar with, and they're all indicated by the ETFs. So you got the XLKs, which is the tech, XLF, which is the financials, all that. And so what I do is I keep an eye on them both in terms of intraday during the week as well as across a month, because that kind of gives me an idea of kind of the relative strength of these things. I intentionally didn't update this chart. Normally I would have updated this chart already, but I left it intact from yesterday. And what we're looking at here is basically from the start of the day, and if you can see that red line there, what this represents is at the start of the day everything zeroes out, and then it's the relative performance of each of these individual sectors over the course of the day. And so over the course of the day, certain times, certain sectors will, let's say, start out strong, but then all of a sudden they become very weak. And so as a result, that's kind of why I go with this sort of chart. Um, but I will, and so essentially what this shows is that yesterday, during the day, the energy sector here, and of course yesterday was pretty much a down day, so even this one, of course, was negative. But relatively speaking, the energy sector here was actually close to break even. On the other hand, down here, the XLVs was the weak sector. XLV is, of course, the health sector, and like I said, I kind of monitor this during this week. So this chart actually started out right here. Here on this chart, I zero this out at the very beginning of the week. And this is like a rolling 4 weeks. So I always have an indication of where things are kind of the relative strengths and weaknesses in the market, because that gives me an idea of sectors where where there might be opportunities. Now, this is done in my platform, which of course is really nice. However, if you don't have this in your platform, or in fact you simply just don't have it in you to kind of really start building building these things, I'm going to show you a place where you can actually get all of this for free, and it's already done for you. And we're going to, after this thing is over, first of all, you'll see you can obviously get access to the recording here, but we're also going to send out a couple of page summary of some of the key things that we go through in this webinar. So you'll get that. But if you there is something here called let's get rid of that just to make some room here. This is stockcharts.com, and beauty part is it's free charts. And if you notice here, they have sector summary, S&P sectors, and they give you the major sectors in the market here. Now if you notice, this is simply just a one-day thing. But if you basically go over here and you click here where it says click here to view a performance chart of the sectors, if you do that, you get this thing, which just, again, this is just an end-of-the-day snapshot, not all that interesting, but here is basically the free thing that replicates pretty much what I built in my platform. If you go to Show Line Chart, okay, and you can change this thing into, you can modify the time frame on this, and so over time, you can basically see the relative movement of all of these things. And what you do is you simply spread this out or compress it, and it'll show it to you in different time frames. I don't want to waste time going through all that. But essentially, this gives you exactly what I built for myself in the platform. Other things I'm looking at in the pre-market is if you go to the NASDAQ website, and again I have this in my platform, but I tried to come up with things that would essentially allow people, if you're not, if you don't have all this in your platform, websites that you can go to. This is the NASDAQ pre-market indicator. Again, it just gives you a flavor as to what you might be looking at in terms of the open. This is obviously pretty flat here. It's not a whole lot, but on the other hand, if all of a sudden this thing was showing, minus 40, minus 50, different story. So that's something that you can look at. Another thing that I'm a big fan of course, is looking for analyst upgrades and downgrades. Again, if you go to the NASDAQ website, they've got, and we're pretty much almost a lot of economic calendars. The things that have calendars, they'll also have these. So this is also a great place just to kind of look for symbols, upgrades, downgrades, where they initiate coverage. So you can see BlackBerry here went from an underperform to neutral, not all that exciting, but particularly if you look at a downgrade, and when you on the rare occasions where they'll all of a sudden put a sell rating on, that's always interesting. That's always fun because it actually takes a lot to get Wall Street to actually put a sell rating on. So when they do it, it's actually kind of interesting. And oftentimes, so what I would be doing and what Ryan would be doing on these sorts of things, Robert Half, Parkway Properties, is we would immediately, our eye would immediately get drawn to that. And most likely what we would do is we would be looking at a chart in order to find some sort of look essentially for a region where we could sell a rally in order to short it. What will probably happen today at the open on these things is that they will probably sell off in the beginning. Then there will be, so they'll sell off, there'll be a drop, a sudden drop on it. There'll be then profit taking, it'll start heading back up. And pretty much at some point where it made a right turn and sort of created a little consolidation area like what I showed you before, it will probably head back to that consolidation area. And that would be the place where we'd be looking to short. So we're not going to be looking to short these things at the open or on the initial move, but what we would be looking to do is to wait for them to rally back up to some point where there was an area of consolidation where price had dropped, and then we would be looking to short from there. So that's something else that that I make a point of looking at pre-market. Another thing on the long side are stock buybacks. That always puts the wind at the sails for certain stocks, particularly if they have a large short interest, where there's a short squeeze going on. So this is something called the onlineinvestor.com. Again, we'll send you, when we send you a summary, we'll send you all these websites. But the onlineinvestor.com has this nice summary of stock buybacks. And you can see it's just done sequentially, and they have like a rolling list of 25 buybacks. And so for today, nothing for today, but you can see yesterday Kimball Electronics, stay. I had one a few days ago where I ended up having a nice trade. I think it was on Cracker Barrel. Basically, it just sets these things in motion, and of course, there's a bullish sentiment that gets associated with all of this. So in this particular case on Cracker Barrel, I had waited for price to return back to a level in order to then put on a long trade. So I waited for a pullback and then went for a long trade using the principle that I had just shown you. So anyway, that's a couple of the pre-market things, all of those pre-market things that essentially you can get for free online. Couple of other things that I look at is I want to see in the pre-market what's going on in terms of some of the major players, and really most of the time there's really two, when it comes down to what the catalyst and what drives the market, there are essentially two sectors that are of keen importance. One is tech and the other is the financials. Really, as the financials and tech goes, so goes the market pretty much. And so as a result, what I will do is I will pop up in the morning. I just want to see kind of what these bellwether stocks are doing. On the tech side, Microsoft, IBM, Facebook, and Apple. And of course, when we say tech, it's not, Facebook is not literally a tech company, but obviously it's playing in social media, e-commerce. So these all kind of get lumped into one. And I basically generally want to see is, are they looking, how are they looking pre-market? Are they sort of all looking like, are they all moving in tandem? Was one up? Is one down? More often than not, in terms of a trading environment, you'd like to see sort of all the oars, in terms of, like, if you would think about a scull or a competitive rowing, you basically want to have all the oars kind of in sync and sort of all going together. That makes for, obviously a more efficient propulsion of a boat, and similarly in the market. If you have, Goldman Sachs going up, but Morgan Stanley going down, and Apple's going up, but Microsoft is going down. More often than not, that's a choppy, inhospitable trading environment. Doesn't mean that you can't trade in that environment. It just means that you need to consider and adjust your tactics. You can't necessarily be looking for follow-through. You can't necessarily be looking for nice, consistent trading. It's going to be more kind of choppy and kind of hit and run stuff if you're looking intraday. On the other hand, if things are looking more in sync, then those offer better opportunities for, in a sense, for easier trading. And so one of the things that I'm looking at in these charts is, and why isn't this not updating for me here? Forgive me, folks. I am having an issue here. This thing seems to be locking up on me here. Let's see if we can get this back here. So one of the things that I'm looking to do here we go, is what I do is I have these charts up here just showing, and this will obviously start to roll once the market's rolling here. But what I want to do here is, here's Goldman Sachs, here's IBM, here's Microsoft, Apple, and Facebook. And what I want to do here is I want to see, once the market opens, that these things are basically kind of rolling in sync. This line here is just essentially, it's what's referred to as a linear regression line. All it does is essentially it fits the price movement to the best line it can for the last 10 periods. So this is a 30-minute chart here. This is a 3-minute chart, the last 10 periods. So this essentially shows in any 1/2 hour period how these stocks are behaving versus another. So you can see here this was at the end of yesterday. Goldman Sachs was heading down just a bit. IBM was heading down just a little faster rate. That's a decent trading environment. It's okay. Microsoft and Apple, you can see, obviously were running in parallel. Facebook was going sideways. That's relatively okay. On the other hand, if you would have seen Microsoft heading down like that and Apple heading up like this, that would have been, in a sense, that would have been a fight. And that would have been something where it would have been sort of, like I said, it's not an impossible trading environment by any stretch. It just, one adjusts their tactics in order to sort of correspond, in order to modify your exits. If you have different techniques of how you get into a trade, sometimes you might be a little pickier about your setups. So that's kind of what we're some of the things that I'm looking at in the beginning of the market. And like I said, once the market's actually rolling, then I'll really have an indication. And once it gets going, I'll get back. I'll show you guys kind of what I'm looking at. Something else that I like to look at, and we'll see what happens today. Right now the market's showing pretty much kind of flat near the open. You can see here the S&P futures, they're up $1.25 there. That's as close, pretty much flat. But on the other hand, one of my favorite trades, and may not necessarily transpire today, but if the market actually starts to sell off, oftentimes, and I don't think it didn't actually happen yesterday, but one of my favorite trades is actually the utilities. Because of the fact that essentially the utilities to some degree represent what's referred to as a flight to safety. And oftentimes when tech starts to sell off, so I'm always ready with that trade. And typically what I'm doing is I'm looking for longs. So if the market would actually start to bleed red a little today, I would turn to take a look at the utilities and just to see what they're doing, because oftentimes when the broad market's red, and particularly the tech sector is red, oftentimes the utilities will go green. One last thing, and forgive me if I'm no, okay, good. One of the things that I also like to look at when once the market's rolling here is, if you notice here, I don't know why my system is locking up here. All right, if you can see here though, here is my watch list here, and this is the one for the utilities, okay? And if you notice, this is the traditional stuff, the net change and the net change from the open and the net change percentage. And of course, this is measured from the previous trading day. So this is the close. So once the market's rolling here, this will show the change from the close at 4 p.m. yesterday in absolute terms and in percentage terms. But the other thing that I look at during the day, and in fact the thing that I actually get really is the key for me getting good intraday trades, is I don't really care all that much about the net change from the previous close, but in fact I really care about the net change from the open. So to be clear, if something gaps up, let's say $4 and goes from 100 to 104, and then an hour later it's selling at 102, I'm not looking at this thing that, oh, this thing is up $2 on the day. In fact, I'm saying to myself, it's down $2 from the close. So in fact, I'm having a downward bias there. And at that point, I'm looking to short rallies into those areas of downward price imbalance. So that's something that most trading platforms have. And I would suggest that you guys add that and put that into your monitoring system. Because like I said, for me, looking at the net change from the open is far more important than, it's obviously certainly important if something gaps up from 100 to 104, but that's one little piece of information. The second key part of information is there follow-through or not. And again, looking at the net change from the open will give that to you. So sticking that into your watch list, or however you monitor various symbols, is something that will really help you. And again, that's where really the key for me in really getting good trades. When I first started out doing this, I just had the typical watch list that everyone told me to use, and I don't know, somehow I realized there was something missing and I wasn't doing well. And then I noticed, well, I was looking to sort of, when something popped up from 100 to 104, I was kind of looking for, okay, well, how do I get into these long trades, because this thing is obviously it's a bullish day for that thing. And then I realized it's not a bullish day for that thing. It's just, it may started out as a bullish day, but ultimately it turned out not to be. So anyway, that's what that's some of the stuff that I look at pre-market. Ryan, if you're there, why don't you grab this back and go through some stuff? Like I said, and let me reset my system here,
Sure.
because there's some other stuff that I wanted to show, and I'm having a problem here.
Sure. When you get back in, right, give me an alert, and I'm going to talk a little bit. Alrighty?
Oh, alrighty.
Okay, folks. Any questions? Throw them in the question box, or the chat box. Hold on one second. We'll grab this back from Mitch. Hold on a second. There we go. Show my screen. All right, hopefully you guys can see my screen. All right, so if you guys were here right from the beginning, one of the trades I was looking at, but I'm not enthralled with, is this Canadian dollar trade on the 15-minute chart. You guys notice all this consolidation here and then this big drop. It's just too messy for the way I trade. I really like pretty clean and clear looking setups. But this is a nice drop nonetheless. It did stop price moving up right there. So right as it's going up, it just basically smacked it back down for a little bit. It's not dropping like gangbusters or anything like that, but it did, got a couple points down, so we'll see. If I was going to take this trade, I would be down in this vicinity with my target. Like I said, I don't like the trade. Plus, the open's coming up. If I already don't like it, the volatility created going into the 9:30 open is going to be tough. So looking at that, this was a no-go, and I'm still happy with my decision. So we'll wait and see if what transpires. But I am still waiting on this guy on the S&P. Kind of similar looking charts, but a little bit cleaner of a base in here, and then a nice sell-off. So we're waiting for price to get in here. and then we'll see what happens when it touches that 2161 area. Probably for the open. I notice all this consolidation here. It's kind of trying to get up, and it just can't break free into this little vicinity here. So we're kind of in a wait and see attitude. Canadians moving a little bit higher. I got some stocks I'm waiting on, some stock setups. Facebook. Let's see. Let's look at some big names pre-market, and then we'll get back to the futures. And if you guys have any stocks you want me to look at, or futures currency pairs, futures. If you want to talk some options, we can do that eventually. But probably not a good way to start. So yeah, it's not Starbucks. Okay. Let's see. Sorry, I'm just looking at your questions real quick. Let's see. Yes, I will look at more tech companies. I'll tell you what tech companies I'll look at. We'll look at Aussie. How do you decide when to trade? What are the tech stocks you look at? How do you decide when to trade the stock versus the options, or some combination of the two? Good question. All right. All right, so let me start there. Okay, so Stephanie, for whether I deciding to trade the stock or the option, so this is a perfect example. Looking at Tesla. All right, so this is an easy decision, right? Because Tesla is $210 a share, or right now $200.70. If I have set up on here, I could probably do a lot more, either buying puts or selling calls from this area. So volatility is starting to pick up a little bit the last week or two. So the premium's getting a little bit nicer on selling options. So I had a bear call spread on Tesla expiring today. I closed out yesterday, waiting for my target down here. But the options have no premium left, so better to close out than wait and see what happens on the day it's supposed to close. So if it's in a really expensive stock, if I can get in for a really cheap price because of the spread, every option trade I do is on either a credit spread or a debit spread. Sometimes I'll just buy the pure put and call if it's really cheap and just doesn't make financial sense to buy a debit spread. But a lot of times it's on the large stocks that I don't necessarily want to buy big positions in. Tesla, Google, even Facebook and Apple. I mean, $100 a share starts to add up. You can do a whole lot with selling premium in those as opposed to buying the stock. And the same with buying the calls. If you have, if you're using some, you'll notice here my stocks. This is my stock watch list over here on the left. You'll notice all the actual stock time frames that I'm using. I have a daily, a 195, a 130, and 65. This is not for day trading. I really do, when I do options, I usually actually do a hell of a lot off of high time frames. The lowest I'll go is the 1 hour chart largely. So, sorry, I got distracted for a second. Ooh. And let's see what happens on the open. Give me 1 second. So that's one of the ways I'll do it. And honestly, I do prefer options to just pure stock trading because I like to be able to sell premium. Premium's been kind of, not all that great the last couple of weeks and just started to pick up. So I was doing a lot more buying the calls, buying puts, or debit spreads because it was fairly cheap to do. But I always start with the idea, if I'm going to be doing some swing trades, then more than likely I'm doing an option. For stocks, I'm more of I do prefer to be in and out. I do a decent amount of swing trading in stocks too. It's just it doesn't rival what I do in options. So yeah, I do a combination of the two, just with a little bit of a bias towards options because selling premium's amazing. All right. So let's do this. As far as selling premium, I think someone said to me once that there's no guarantee in trading, but the time decay is the only guarantee. So that's kind of why I really do prefer selling for premium than buying. All right, so we got a lot of symbols in here. Let me do Twitter, tech stocks, GILD. All right, let's start with Miss TLS. And we will look at Aussie USD, and then Stephanie, I saw you put some symbols in there, and then Tiffany, you put in a decent amount of symbols too. So let's start with Aussie US, and then we'll look at some crosses too. Okay. All right, a couple minutes to the open. Okay. So Tiff, if you're watching, if not, you'll see it on the recording. A little bit of an area right here that looks interesting. Hold on one second, guys. Sorry, I'm just getting a message. All right, sorry. So this little area looks interesting. This long wick is worrying me. You really don't want to see that in a zone that you're going to short from. So let's drop this down to let's do a 180 and then a 120 minute, and let's see if we can make this look a little bit. Nope, the trade just looks worse. Okay, that's going to happen too. Let's do let's give it one more shot at a 120. I don't know why that happened. All right. All right, it looks a little bit better on a 2-hour chart right here. Still not great, but a little area to get short from. It's just a wide zone. I mean, it's $300 of risk. It is a 2-hour chart, but let's go to a couple other time frames and see if we can get this into something more affordable, or just even something more interesting. Yeah, I'm not a big fan of that short, but that's something I would give a little bit more credence to than a lot of other. All right, looks like it broke through this little guy right here. Maybe if I do a 30-minute. Hold on. Yeah, nothing in here. Nope. Well, literal garbage, Tiff, on Aussie USD. Nothing really here. So that means on the futures it's the same thing. So saved me a trip doing that. I just went down to a 5-minute just for fun. I don't really trade off 5-minute charts in the Forex market. I'm really like the higher time frames, but nothing here on the Aussie US. Let's see. Okay. Pound and then the pound yen. You got it. Okay. Okay, some news came out overnight, but it doesn't look that it did anything severe. Might see. I'm going to give this the blue circle, not the yellow box, because probably needs to be opened up a little bit more. You notice that nice sell-off there? Not a huge fan of this, but there could be something in there, Tiff. Let's see. And just to get a little bit grander scale, let's just say this doesn't work. This giant move down on the pound, you see that? That's the Brexit. Right, so that's the initial impulse move, right? So notice how it just consolidated after that. It kind of dropped, and now it's trying to get, looks like it's trying to get higher, and then just doesn't. So until the pound can really get above, let's just say here, I don't really think it's going to do much. I think it's going to be trading sideways or trading lower until it really can start getting above this little consolidation area. So that's just a big picture analysis, not anything really trade-off, just something I'm keeping my eye on. this is a 2-hour chart. Let me go to a 240 and then we'll look at it and see if there's something else in here. This might turn out to be something nice. Let's see. Let's use that. This isn't a bad looking trade. Now, one problem is if it hits today, it's got to work quickly because it's Friday. Otherwise, you got to hold it over the weekend. Now, it's a short. I prefer to hold a short than a long over the weekend. But still, if price gets in here, we'll look to take that short. So this is a good one. Keep an eye on this, Tiff. Let's see here. Oh. All right, and then we'll look for targets when it actually makes entry. But this is a good little trade. Right now, let's just say your target's going to be somewhere in here. Alrighty. And cross pair GBP, GPY. They usually don't look all that different, but in this case it does. Let's see. That would have been a nice trade. Look at that. Then, damn it. Alright. Alright, so nothing on the 240, nothing on the daily, on the cross pair. Let's go to a 60-minute. Looks like there was something in there. Okay, we need something interesting. We need something fun. Make it look like a hero. Let's see. Alright. Tighten this up. So if you're a new Forex trader, stay away from the crosses for a little bit. You know, do that. Tiffany, the girl who's asking the question, she's a pro. She knows what she's doing. Kind of wide spreads in these. So I usually tell my coaching students to stick to the dollar pairs in the beginning, so they're a lot cheaper to trade. But over here, this is interesting. Notice that nice sell-off, that consolidation. I'm liking that. And there's a couple of little ones here. I'm not going to identify all of them. There's this guy. And there might be something in here, but I like this first one here. It's a nice drop from there. And these other two, this one I like. This one, you know, it is what it is. I like this one. And I like all the consolidation below it. And then if it can get a straight, just a wick touch here. I have a feeling this is more for Monday. So, you know, just keep an eye on this. I'm going to keep this tight, and I'm going to screenshot it. And I will send it to anybody who wants it. Let's see here. Give me a second. The market's going to open any second, and I'm going to go look at my S&P setup. Okay. And I will get to all the questions, and if I don't, Mitch will. So just hang tight on that. Market's open. That bell should ring any second. Nope, no, it didn't. All right. Notice we immediately started moving higher as we approached the open. And let's see how this trade works out. We're waiting for price to get in here. We want price to touch that line right there. it is ripping right now. This is kind of standard. See how that Canadian worked out. Canadian's in there. It didn't rip through it, but like I said, it's going to create a lot of volatility on the open. It's kind of a mess going into it. I didn't like the trade, like I said. So let's see what happens if it comes down. Let's see, Tesla, what's that doing? Tesla's heading in. Oh no, popped up a little bit. All right, so we're waiting for this touch of this zone here. That'll be our entry point, and we'll have a stop loss on the other side. So this is the most important part of the trade. Stop loss. And then what we'll do is enter short. All right, and if this touches, let's see here. Look to get out around 21. What is this? Let's see. 21.52, so about 8 points. Change the color to blue. Could get out a little bit ahead, but let's see. When Mitch gets back, I'm going to look at the rest of the stocks that you guys were talking about, and then he runs a scan in the morning for cheap stocks. It's awesome. So 5 minutes short. Can really give you good opportunities for like the below $20 stock names, not pennies or anything like that. But if you're trading a small account and you want to trade stocks, he put together something really cool. So we'll take a look at that. All right, it's not exactly getting there. It's only 2 minutes in, so let's keep moving, and then I will go back and revisit that. Let's see here. Back to questions. All right, let's go back. Other tech names, TIFF, or Google Net. Well, right over here, you see the watch list. Well, you'll notice my watch list on the side here, right? For stock trading, it starts out with the FANGs: Facebook, Amazon, Apple, Netflix, Google. You know, the big. Obviously, these are 5, but usually they call the 4 horsemen of tech: Facebook, Amazon, Apple, and Google. Remember Netflix there? There's a lot of good trading there. I have Federal. You notice it's very short too. It's 22 stocks, right? Federal Express, Microsoft, and I think that's it as far. Oh, Tesla is the other tech company, and then I got a couple others in here. I trade different things, but yeah, mostly those 5 tech stocks, and then add in Tesla, and those are some good trading in there. Okay, now let's see. Stephanie, you put some stocks in here. Let me look at those. Twitter. All right, Stephanie, let me get into some of the stocks you put in. Why did I pick TradeStation? TradeStation really just because of the charting. I have Thinkorswim. I don't have ActiveTrader Pro. We've used other platforms. I've used NinjaTrader, a couple of different Forex platforms. As far as stocks and charting and just having some fluidity and flexibility, I haven't found anything nearly as good as TradeStation for its chart trading. As far as its chart analysis. For Thinkorswim, to move a chart around, I would have to right-click, click OK, yes, move it around. I have this, just my eye trained for this, so I like the way it's set up. I like the white background, the colors, everything, but mostly just the ease of moving and ease of doing business. Since charting is the majority of what I do, that's what's most important to me. So that's why I picked TradeStation, even though it's a little bit, they have some flaws, a lot on customer service and different charges and stuff like that, but as far as charting, it's the best. It really is. I like Thinkorswim's options platform. I love their customer service, to be honest with you. I think they're phenomenal. Really work with you, really help you. It's really just the charting. That's 100% why I've chosen TradeStation. me a second here. Let's see. BMY, Amazon, and CME. Okay, hang on one second. Okay, so Bristol Myers. Let's see if this is falling from anything. Nope. Oh, that touched. Okay. No go there. So we gotta go a little bit lower. Alright, nothing to really get long from on this daily chart on BMY for down to 50. Alright, and then we got a little area to get short from up here. Not a big fan of these, but it's a trade nonetheless. Pretty cheap base for a $55 stock, so that's not bad. So kind of the same setup on that other daily chart here. So 195 minutes is a half a day. I'm looking for something a little closer. All right, I have a feeling the $55 is the sweet spot to get short from. Let's see here. Price is heading up. I can see this happening today if we get a little market gets a little bit of legs behind them. This is a nice short. Notice how price kind of trades sideways and then you get the sudden drop. I like this 55.06. Kind of wide for a 60-minute chart. I mean, it's 40 cents. I could roll with it, but you know, I'd prefer it to be a little cheaper of a base on a 65-minute chart. So, but this is something kind of nice on BMY. I expected to get there today, but who knows? It's really not much holding it up on the bottom. No real fresh long areas until $50. So if this gets in here, I might look to short this. Let's see. There we go. All right, Amazon. Actually, before I do Amazon, let me go look at that S&P trade and see if it got there. Nope, kind of backed off before it got there. Damn it. Oh, Canadian's starting to work a little bit. Let's see what happens there. I don't expect to get too much out of that. So, okay, I assume Amazon is new highs, right? So I don't think we'll be looking to short that, buddy. All right, so our only opportunity for Amazon is really if it comes down, look to take it short in this vicinity here. Let me make this a little bit larger so we can see it easily enough. Yeah, a little area to get long on Amazon from, but as far as shorting it, I don't think we have anything that's worthwhile. Sorry, that's some old option stuff below. $8.16, what was the other one? 805. Okay, so this is a little bit before that one on the daily chart there. This backs off. I can see a little touchy here. It's not bad for Amazon, $3. So we basically need Amazon to come back down. Maybe today, maybe not, on Monday. and kind of touch this little area and look for some price to head back up. And with nothing above at new highs, that's what you want when you're going to get long. You know, have room to go if it actually does make entry. All right, so that's the best setup, I think. I could look at it on 130 and it looks about the same, but 8, 11, 17. I can make it a little wider. There, there's a 130-minute chart. Gives it a little bit more. But anyway, this is where I would look to get long from. There's some other little zones in here, but this is the first one that'll come up if price comes down a little bit on Amazon. CME. CME. Okay, let's see here. Well, I guess it sold off on that news that were they buying something? No, that was CBOE. Never mind. So this trade happened already. There's no go here. Notice how it touched and it went up. Kind of stayed above it. Struggling to stay above it right now. We'll see what happens. If I was already long this, I might look to get out. Really up here, this could go in this 107 area. 108, excuse me. 108 even. So if you're already long this, great. If not, let's go look at some new opportunity on this. Let's see here. Is that touched? Yeah, that looks touched already. So no go on this one. I have something here, but it's a little bit messy on this side. Yeah, nothing here. Just call it the same daily zone. Let's see here. 30. Not a big fan of anything in here. Yeah, above 108 is where to short it from. Nothing really coming up that's got me excited. This little area I like to short from. Kind of small consolidation, then a nice drop. So up at 108, that's where I'd look to, if you're in the trade, some long setup on here, that's where I'd look to maybe take a little profits, something like that. Let's see. JLD, and then Twitter. All right, I'll have to load more data. It'll take too long to do that. So let's see here. That's a holder. Nothing here on the daily. Let's go to 195. All right. If this stays bullish, we could look to get a short in right there. This is a nice short because that gap right below it, right in here. So price touch there. We look to take it short. Yeah, I like this setup. This could hit today. Really, the market. I mean, it's early, so it definitely has time. Oops. That's nice. Good possible setup. We'll see. Let me look at it under 65 and then I'll look at Twitter. Nah, it looks about the same. That's this area here. Looks a little cleaner on the 130, so we'll stick to that. Nothing really to get along from. You know what? I just had an idea. Let me go look at a weekly chart of Gilead. See if that keeps me from having to load more data. It'll just slow us up too long. Yeah, nothing here. All right, nothing really to look at. Let's see. Now we'll look at Twitter. Wow, nice gap up here. I guess from those rumors they're going to get bought. Wow, okay. I guess I will stick to the higher time frame. Let's do a weekly chart. Oh, broke through this little area here. Again, on news probably. All right, so it looks like this might be the next step. It broke through one. I doubt it can break through 2 weekly levels unless it literally gets bought. I know there was, who was going to buy them? I don't remember. I read a story someplace. Someone wanted to buy Twitter. I can't remember who it was. Just like a day or two ago. But anyway, it broke through this little level on that news. I have a feeling, short of getting literally bought an offer for $40 a share or whatever it is, if there's no news out, but this little area should hold. Now, with the one caveat, you'd be better off just skipping it. With no news in the air, when we know people are trying to buy it, whoever, like I said, for some reason, the name escapes me. I know Salesforce was talking about buying Twitter, and then Disney. So that'll do it. Disney's got plenty of money. So if they make an offer, this will explode. So I wouldn't, put it this way, I wouldn't touch it. Look for another stock. Now, you never know with news what's going to happen, what's going to come out. The only thing you can predict is the economic reports that we were talking about at the beginning. But when something's known to be in a possible takeover, keep a watchful eye. Anyway, that's a good setup right there. Let me see if I missed any stocks, Twitter. All right, let me reverse engineer this. My go-to trade to short? No, put it this way, the market's going higher. I do want to look in the higher time frames where I can short and kind of trail it down. And sometimes I might want to just ride with the current in the lower time frames and just make money that way. But no, I don't necessarily have a short bias or a long bias. Whichever bias is going to make me money. How about that? But we did look at a lot of shorts today, which makes me remember. Let's go look at it. No, S&P's not really doing much. This trade's still active, though. There's no reason to cancel it, so we'll see what happens. Has the Canadian dollar trade. Kind of just whimpering around. It's trying. I mean, if it gets below... And I should look at this in USD CAD. I just got lazy. Give me a second. If this can get below 62.37, this might move. Like I said, I don't like the trade. I'm not in it. Just just for analysis purposes. Let's see. Let's see. Do you have rules about how much money to dedicate to the trade? Yeah, absolutely. So for any one trade, a new trader will always tell never risk more than 1% of your account in any one trade. You can really get that to 2% if you have to, if you're trading small. If you start at 1, you want to move to 2, that's all fine. But if you're getting into a position which is different than a trade, don't allocate more than 20% of your account to any one play. So let's say an options trade, and even that could be a little high. It just depends. if you're trading with a decent sized account, let's say 50K or more, you can be very flexible and have a lot of. Let's just say you're going to do mostly options. You can have a lot of 10 lot trades that way and still be completely safe. So yeah, let's say 1 to 2% of your account in any one trade, and not more than 20% in any one position. Depending on and we can teach you how to be flexible with that and how to do that. But yeah, that's one of the bedrocks of trading is risk management. And you'll notice I always talked about placing a stop loss. Well, I'll reverse engineer after I put my stop loss on how much capital to allocate to any one trade by that 1 to 2% rule. Let's see. What was your other? When do you trade in a daily versus weekly versus other time frames? Okay, so mostly let's go through it for each different sector, right, or a different asset class. So for the Forex market, I largely trade swing, right? I don't do a lot of day trading at all in Forex. I really prefer higher time frame trades. I like to actually set them up and just forget they exist and watch them do what they do. I do have daily 240, 60-minute, and I just threw a 15-minute chart in here. But I do prefer the higher time frames. A lot of my chart trades on the Forex market come from the 240 all the way down to the 60, not lower than that. So I should say I do take trades off the daily, but 240 is kind of my go-to in the Forex market. So I can manage risk there at a certain period that I like, and I also can get the wins that I want. So that's kind of how I determine things there. On the stock side, I largely, if I'm day trading, it's got to be a cheap stock. So if I'm looking to get in and out of it in one day, I'm using 1 hour all the way down to maybe like a 5 minute. But largely with the swing trading that I was mentioning before, I'll use dailies, 195s, maybe 130s. But the daily and the 195 are my go-to charts for stocks or for swing trading stocks and for options. I popped up a weekly here just because I saw that the daily was kind of messy, so I did the weekly, was able to clean it up a little bit. So do some trades off the weekly chart, but not a ton. And largely, again, that would be in options. And then in the futures market, I started out more as a day trader in futures. You will see this is a 5-minute chart. I just saw that sell off, and I had to resolve it into something that would look good for our trading purposes today. I had something on the ES the other day off of a 240. You'll see here this big drop here. Price gets in there and then drops. And just for fun, give me a second here. So check it out. You guys see this setup here, this drop, base, drop, right? Here it is beforehand. There's price heading into it. Here's what it looks like now. Price got in there. I had a little worry spot right there and then just collapsed through it. So I started out in futures more of a day trader using, 3 5-minute charts, maybe 10 or 15-minute charts too. Now I'm doing a lot of high time frames in the futures too. Just makes my life a little bit more leisurely. I have to look at a lot less charts, all that kind of good stuff. I can kind of set it up. When I lose small, but when I win a lot bigger than when I'm day trading. But, I still occasionally throw it on, but largely I let the instrument dictate what's going to give me the wins that I need. And in this case, we're looking at a 5-minute. It's a nice setup right here. So we'll wait and see on this one. But, yeah, it really it's the instruments that dictates what I majority of the time trade, but then again, it's also the chart. So if I see something on a 5-minute and I don't see it on a 60, maybe there's a trade there, maybe there's not. But you give a little bit more credence to the higher time frames. Let's see here. Stephanie, I see a question here about, let's see, thank you, for options learning and trading. I'm not sure if you're referring to your previous low volatility comment. Let me get to your low vol one, right? Okay, so in a low volatility environment, and I want to be an options trader, which, vol's been pretty low the last, like I said, let's say the last month. If vol's low, then to be honest with you, I just can't sell premium. It's just not, I'm not going to take in enough to warrant the risk. So what I'll do is you'll look to then be a buyer of options because they're going to be cheap. But again, I do it all predicated on this price action analysis, right? So first, let's say I have a trade set up on, say Exxon, because I think there's still a short on that. Oh, it's back in the zone. Okay. Oh, Tesla. There we go. All right. So if I can't get premium off of Tesla, right, or if I can't sell for premium, but I have this set up here. So the first thing I do once I find a stock that is optionable, right, I'll find these little areas of price imbalance, right? So here price consolidates and a nice drop from there, right? Really nice. So then I'm looking at vol, right? And if vol is low, then I cannot be a seller of it. I really want to be a buyer of it. So what I'll do is I'll buy puts in this area as opposed to selling calls. And if puts are a little bit on the expensive side, I can sell one and then buy another one a little lower. I'm capping my upside. Now, there was a point where just options were insanely cheap over the last 2 or 3 months, and it just almost wasn't affordable to do debit spreads, which is selling and buying and then selling one, right? So you could just buy a put, but then there's some secondary analysis. Okay, so which put? Expiring next Friday, 2 Fridays from now? How long is this trade going to take? How much am I going to make off of it? Looks like Mitch sent me something. Hold on 1 second. Lots of stuff. All right, hold on. All right. So that's how I deal with a low volatility environment. Then I just have to be a buyer. But in my back pocket is always this. I'm never getting into an option trade just because vol's low or vol's high. I have this price action strategy tell me where to get in and where to get out, and I use that first. And then if vol's low, I'm simply an options buyer, and if it's high, I'd love to be a seller because I just can't wait for expiration. Make sure I got to all your questions. I got about the trade station. Tiffany, I looked at Twitter. I think I got to your question on all the tech stocks, Tiff. Let's see. Got to all the Forex pairs. If I missed anything, just tell me. But I think I got to most of it. You're welcome, Stephanie. All right. So quickly, I think there was a long setup. Oh, well, hey there. What's great is I did not take a screenshot of this. Damn it. Now, it hasn't gotten to the moon yet or anything like that, but see how price exited that area? See it touch and stay above it at 201.19. This is almost a buck. So if I was going to stay in and get into this trade, or it had gotten into it, I may look to get out at 203.95. Take a quick picture. Alrighty. Or if I was in that short sell from Tesla, I would have looked to gotten out at that 231 or a little bit before it, actually. All right, so hold on. Mitch sent me some stuff, so let's take a look and see what he sent. Alrighty. bunch of setups. Okay. Mitch is having some computer problems, so I don't know if he'll be joining us again, so you guys look like you're stuck with me. Which means I have to see if I can get someone to bring me some coffee. Alrighty, let's see. So let me go through some of Mitch's stuff here. And the MRK trade is sort of working. Alright, so let's see, MRK. Two-minute, 62.24. Alright, so now this is a day trade. He's in a 2-minute. There may be rules you may hold on to it, but and I'm sure he's already out of a little bit of it, maybe hanging on to just a little bit more. Wow, look at that. Okay, so price dropped down a little bit and then exploded out. A couple minutes later, it retraced, just kissed that top of that level, then exploded higher. Let's see. Okay. And Mitch said he got into this. So this is a nice trade. Look at that. So we missed out on that because Mitch's machine was broken. Great, great. I'm just kidding. That sucks. I hate having computer problems during a presentation. Anyway, nice trade. Look at that. Price exploded, retraced, touch, and I'm sure Mitch already took off part of his position at some point, and now he's just got to run her and see if this goes. So let's higher time frames and see if there's anything there to stop it. Now, kind of clear sailing on the higher time frames until at least 63 something. Let's see, 63. 63.02. Yeah, I'd be a happy camper if I was him. And that's not even fresh. That could probably break through it. Would I want to test my luck? No, but all right. Okay. Go back to the futures real quick and then I'll... All right, may get there, may not. Let's see. Let's go look at the rest of Mitch's stuff. Let's see. PFE. All right, this is pretty close. What is this? Pfizer. So all right, this is a short setup, waiting to see if it touches right there. And let's see if it comes back right now. The risk reward looks really good. Let's see if this touches. Let's see what else Mitch has in here too. Hey, sure. Mitch just Skyped me that this nice little level too. Yeah, I like this. Yeah. This is just that little hiccup on an otherwise nice orderly move down. So we'll see if this touches first, and then that would be like my backup plan. Obviously, we like this one a little. It's all of 6 cents, so the risk is minimal. Let's see, what would my reward be if I get to that one? So 32 cents. Mitch, if you have any cheap stocks, I assume that's what that X is. Never mind. Sorry, I just saw one or two cheaper ones on here. Sorry. What I'm going to do is look at I'm going to just use this as my workspace, and we'll be able to look at all of them kind of at once, or majority of them. 60-minute, 35.04. Alrighty. Okay, something down here in AAL. Let's see what else is here. We'll look at MARK, RCO. Let's look at Voya. Nice little setup. Gets up, fails, just drops like a rock. Nice. You can keep your questions coming. I'm going to look at it in a second. So, CRM looks close. Alrighty. Alright. So we got some setups. Let's see. We got 4 right here. AAL doesn't look too close. Salesforce, if it turns around, about the same distance. Voya looks like it could hit this morning. And then we've got PFE, Pfizer, on a 60-minute chart. This nice drop here. It looks like it wants to go. It's only four pennies away, so I'm really hoping to see if that gets there. Let me just quickly, I'm going to go look at that S&P trade. Oh, there, right, S&P starting to move again. So we'll see if that trade makes entry. Target's still holding. Will be down here. As of right now, we'll see what happens when it actually gets there. Pound isn't really moving much. Nice setup there. Canadian dollar is just kind of staying in that zone. So it's holding, but just not the way we want to trade it. All right, so it's almost there. Penny away. Okay. It's in there. This is a small zone. If it works, it works. It's only 6 cents of risk. Let's see. We have clear sailing if price does start to come down, really into 33.45. Get out a little bit before there. And then if the trade doesn't work, we have this one above that we'll look to short. This is really small. I mean, this is 6 cents. This isn't, you know, a dollar risk trade or anything like that. I mean, even on 1,000 shares, it's only, you know, $60. So crazy thing is it's kind of, it didn't just plow right through. It's kind of holding. So if not, we'll look at this guy right here. And even that's only 17 cents. So all right, let's see. It's kind of moving back and off, moving back and off. All right, this looks like it's not going to hold. All right, just peaked above it, so this trade's persona non grata. Let's see. Could see something backing off here. Not a big fan of that, though. All right, so let's look at something else. What else will Mitch give us? Let's see. Let's look at X because it's a below $20 stock. Is that a 60-minute chart? 30-minute. All right, so Mitch is looking at this on U.S. Steel. Price trading sideways, nice move down. And then, let's see, the trade is about 18 cents of risk, so not bad. I think I'm taking this one. Price touches here. We'll look for it to come down. It's got clear sailing, hopefully. Let's see. PFE short is inconsistent if one considers how good an MRK long setup. Oh, good idea. Major saying with how good the long setup looked for Merck, Pfizer should be trading similarly, and that didn't look as good. So trading inconsistent. Okay. BMY. Didn't we look at BMY? Oh yeah, for Stephanie, that's right. Yeah. Let's see. Okay, nice little setup there on BMY, and I think there was one more mission post. TWX. And that's interesting because it's a 2-minute chart, so we might see some action there. Alright, so right in here. Alright, so we'll see what happens. This is a 2-minute chart. Hopefully things back off a little bit. We'll get entry on this one. But some of the other ones look just as close too, so we'll keep our eyes open. Let's see here. I think I got to all the questions. Any questions, go ahead, pop them in. I think I got to all the setups and all the specific questions, so feel free. Just doesn't want to get there. Come on. This is a Forex trade we looked at before. Just looking at it on the pound, but looks to be too far off for today, probably. Quickly, I just wanted to look at the USD CAD, the Forex pair, because we had that short. Wanted to see. Yeah, it's messy in the USD CAD too. So it's still holding though. It's pretty crazy. It's like the little engine that could. I mean, the longer it stays in there, the less I like it. But it didn't plow right through it when it made its move down. So it's just got to give me an. If I was in this trade anyway, I would want some feeling of it gets below this little area of consolidation where it's kind of just being a mess. If it gets below there, then I would feel good once I was in the trade that it could get to me my target, let's say somewhere down here. But it hasn't done that yet. But it's just pretty cool that it's holding so well. All right, so let's keep going. All right, S&P's turning around. Sorry, you may hear. My office is right next to a window, so if you hear any cars going by or anything like that, or my dog or kids. Let's see here. Mitch, anything on the cheap stock front? Hanging. All right, so that's working its way. Let's see. Let's look at the euro. And no, let's not look at the euro. The Dow. All right, so similar setup to the S&P. I like this a little bit less. The S&P just clears this little mess a little bit better, just a little. could see some price backing off from this area when it gets here, but just not my kind of trade. I like very clean, not touching anything else on the other side. Looking levels, not this. I could drop this to a 5. It looks very much less good, so let's see. No, if you're a day trader, this looks good. All right. Might see something interesting happening right here. Price touches right there. Okay. All right, so guys, the Dow's about to enter this little area on a 5-minute chart. I'm not taking this trade. I'm just kind of wanting you guys to watch it and see this work, not work. And real quickly, let me go over to TW. Oh, look at this 2-minute chart. TWX is about to trigger. Give me 1 second. I'm going to pause sharing for a second, okay, guys? Okay, I'm back. Let's see here. Hold on. Sorry, I was setting up that TWX trade. So, all right, so that's going to be the exit right there. Okay. Hey, Karina. Mitch does a scan on a bunch of criteria. Give me a second here, and I will grab a video he did. And he basically, in the video I'm going to set, you know what, I'll email it to you, Karina. But he did a video on a bunch of different criteria and scanning for stocks between $20 and as low as $3 on a certain amount of volume. That way he doesn't wind up with any kind of penny stock trades or anything like that. That are we refer to as roach motels, is that you get in, can't get out. So you can find really cheap stocks that are very highly liquid, and then just do your price action stuff, and then take a look at that. I'll do a presentation early next week. Okay. He said he'll go into it in a live presentation next week, Karina, so you'll get to see it there. But in the meantime, I can send you the video. And in the video that we have, he does it with a free tool called FinViz. He doesn't do it with TradeStation. So a lot of people get worried. They see TradeStation. They think they have to do it because their platform, they don't know how to use their scanner, all that stuff. This is just on a free website, fairly easy to use, so not a big deal. Is that YM? Ooh. Mitch's video on how to, let's watch the video too. Video on how to avoid the roach motels. Can you please send it to me as well? Thanks, Steph. Sure, Stephanie. I will send you that the video too. All right, so the Dow this is the Dow futures, traded a lot less than or a little bit less than the S&P futures. Everyone kind of wants to trade the big dog. I really like trading the Dow futures as opposed to the S&P. You'll see here the parameters are 147 and 133. Now, each increment is in $5. So this is 14 ticks long, so that means it is $70 of risk. And let's say I'm going to get out at this 210. I can look to make about 53 and 40, 53 and 10, 63. Make about $300 on this trade if it gets up here. Now you can have a target one, let's just say somewhere in this vicinity. But your ultimate target would really want to be up here. But there's some money in 50 ticks. That's about $250. So if you're a day trader, that's pretty good. I made note to send to Christina and Stephanie the Roach Motel presentation and the scan. So let's keep an eye on this. All right, S&P is just kind of playing around, kind of in a similar looking level to the YM, which is the Dow futures. A little bit cleaner and better looking on this as that TWX trade down. Kind of just playing around in there. That's okay. We don't have to watch the whole thing. We're just kind of keeping our eye on it. More for the presentation than anything else. So I want to keep looking at this because touch is kind of staying above it. Let's see what happens, and then I should look at that Canadian. What's USD CAD doing? All right, staying above it on the USD CAD, so that means the Canadian futures are probably doing the same thing. All right, so let's see. Come on, make me look good here on this Dow long. Let's go. Futures versus options. Okay. Let's see. Well, let's start with your method of trading, your style of trading. If you're a day trader, don't recommend options at all. I really prefer options. Let them move. You know, do I get into an option trade in the morning and get out of it during the day if the move happens fast enough? Sure. But largely, if you plan on being in and out of a trade in the same day, futures are the way to go. Forex would be second, but between futures and options, definitely go with futures. If you're trading a small account, I get asked this question a lot. Would you do futures or options? I usually push people to Forex, but if you kept me to just those two, I would say, let's see. If you have a couple of $1,000, like $5,000, futures is fine. You can trade one contract and be in a good spot. If you have $5,000 and you want to buy options, I also think that's a good spot. Now, if you want to sell options, I think you want a little bit more money. You still obviously can. You can just take small sizes, you know, two contracts and sell it for $100. You know, make $100 on time decay or a couple $100. So if I was trading a small account, maybe I'd gear a little bit towards futures. But they both have their place. It's all just a tool in the tool belt. I like futures because of the leverage. I can trade them with a relatively small account size. I like options for the same reason, but I also like the time decay factor when I can sell options. So again, like just a tool in the toolbox. I like that futures, I don't have to look at a whole lot. There's only a couple of futures contracts Mitch and I trade. The two of the indexes, which is largely the S&P and the YM, look at that go. Alrighty. Let's go back to there we go. If that hits that blue line, that's nice. 44 ticks makes for, let's see, $220 if it hits that blue line. On a risk of $70. Not too shabby. Yeah, so I know that's not a definitive answers on futures versus options. Like I said, just a tool in the tool belt. I really like options because if you can sell and sell, premium last week to expire today, and you have this price action stuff, it's just a win-win. But futures, as far as buying and selling goes, it's very liquid. It's relatively easy to trade. So, like I said, tool in the toolbox, and it depends on your agenda. If you don't want to be a day trader, you definitely can swing trade futures. I have a couple of students that do. I do it. Options have a little bit less risk as far as Futures are trading 24-hour market, so that does take some of the risk off because it only closes for about 15 minutes. But with options, if you're buying, I mean, your risk is relatively minor. And if you have a spread on, well, just that you have to control that with the size of the position. All right, just hit that blue line. Let's see if this goes up to that 18,210. So somewhere in here is where I want that to go now. So this already would have pocketed you $220. Now it's just to see if it could get 50 and 10, about a little over 300 now if it gets to that blue line. All right, Time Warner's hanging on. Doing what it's doing. S&P starting to move a little bit, but also backing off. Let's see here. All right, looks like it touched right there. Mitch was in this trade before. Let me just highlight this. Give this a little space. Nice move down. Price touched, came down, back in the zone now. Not stopping him out, or not stopping out, but got this initial move down. Looks like that would have been an okay target for like a little scalp. And now it's kind of just playing around. But small risk trade about 9 cents, let's say 10. That was the, okay. Oh, nice. All right, I was confused on this. Remember this trade I showed you before that Mitch popped in here, that Merc? Let's see. Right there. Thank you. Sorry, my daughter's looking for me. All right, so let's see. So this was Mitch's touch. Price went up. I assume he got out someplace up here on his first portion of his position. And then, wow, this was ultimate target. All right, so that's a nice move. A nickel of risk to make about 35 cents of profit, probably even a little bit more. And if it breaks through here, this could probably go, this could probably start moving. But that's not too shabby. First was around 45. Yeah, so he pocketed about 20 cents on that first tranche of shares and then let the rest run. And it looks like it's going to break through this little vicinity too. It hasn't broken yet. But if it does, this could keep going. I mean, you got to keep adjusting yourself. But if you're looking to, if you're okay with, trading, let's say 1,000 shares, and you get a target one, 500 or 750 shares, and then let the rest run, you move your stop to break even plus some to get some to pay for the trade, and you just kind of let it go. And if it hits your target, great. It really just depends on how you want to trade. Yeah, I was just staying around that first target. This is the second one here. This is nice. S&P is doing the same, which it should. Canadian's staying around that little level. Let's go look at the Canadian dollar futures real quick. Came in, came out, just doesn't want to break down. But like I said, I didn't really like the trade, but it's not going gangbusters, but it's holding. Holding. All right, so let's go on. We'll look at the Dow. All right, anything else anybody wants to look at on the future? You know, shout it out. I mean, we can look at gold. I don't really trade natural gas much anymore. Actually, for that matter, I don't really trade gold too much anymore. If any of you heard my gold story about Mitch giving us, if you guys don't know Grover from the trade room, me, Grover, and Mitch, we're all looking at this setup on gold, and kind of like this one. Not as good, though. We had this clean, perfect-looking setup on a 4-hour chart. Risk is about $200. Now, on a 4-hour chart, that's amazing on gold. That's really, really cheap risk. So I don't really like this setup. But anyway, Mitch finds it, sends it to us in our private IM thing. And so Mitch and I and Grover all take this trade short. So price gets in there. We're in the trade. And it's like, okay, order filled. All right, we're in it. We're short. Okay, great. And then just bang, just stopped us out. We weren't even, it didn't show us any kind of profit at all. So we all kind of blamed Mitch for that. And now I really don't trade gold much anymore. I still look at gold, and I'm tempted to trade it every once in a while. I know if any of you guys saw that video I did the day of the Brexit vote in Europe, I was using gold to kind of give me some leading indicator of like why they might vote for Brexit. So check that out if you have a chance. Again, I wasn't putting any stake in it and saying, okay, well, they're going to vote for it or anything like that. I was just saying there's no supply up ahead on gold. You know, could that be an indication that they're going to vote against it? And so you'll hear in my voice a little bit of curiosity with that. So this is gold and really not much for our purposes, actually looking for trades. Let's see. Little area on a 30-minute, I guess I was looking at yesterday. See, very, very tiny, but small risk. We look at oil. Let's look at oil next after I look at Natty. Let's see. All right. And all right, nothing really on natural gas that I want to write home about, so let's look at oil real quick, and then we'll start to wrap up if anyone doesn't have any more questions. I had a little level here on oil on a 3-hour chart. Wait, yeah, 3-hour. And just kind of pounded through yesterday with the OPEC news. this actually didn't get touched. Let me widen this open a little bit more. Just missed this little level here. I don't know if I'd want to take it on that second go. It's not tested and not touched, but let's see. TWX moving. Okay, go back and look at that. Not touched or anything like that, but still just makes me uncomfortable that it came within a tick. All right, this is the same trade, just dropped down a little bit, so this is nice. All right, so I like this guy on oil a little bit more. Really close, though. I don't know. I don't feel comfortable with that. All right, let's go to... All right. Time Warner is moving. Got entry a couple minutes ago. It's pretty bullish right there. Now we just need to get up until our target. You could take profits a little sooner. I like this guy right in here. But just kind of depends on how much you're looking for out of the trade. So Mitch identified this consolidation in here. Nice pop out. Price fell in here. Just kind of that wick touch. Closed above here. Kind of stayed around here. Now we got this bullish candle right here. Let's just see if it can... Let's see if it has legs. Let's keep an eye on this for right now. And then we'll go look at one or two other symbols. And we will call it a day. Let me just go see if I missed any questions. Oh, pretty good questions happening. All right, so keeping track of your P&L, do you follow your P&L for different time periods simultaneously? Sure. So if I have, let's start with options, and if I'm selling for premium, I'm really just going for expiration. I'm kind of watching the chart, just seeing if anything gets in the way, or is there any announcement coming out that may affect it. So if I'm, let's say I'm selling a 10 contract spread on Apple, and I'm going to take in $1, so that's $1,000 by let's say next Friday. If it hits my zone, let's just say this is an Apple chart, and on TWX, this zone here, price pops out of here, and that option starts to deteriorate faster than I anticipated. So if it goes from $1 to 50 cents in a day or two, I'm more than likely just going to take that off the table. If I can get half my money in 1 or 2 days as opposed to a week, I'm taking that money and running. The same if I was buying it, even more so. I would rather, just because of your fighting time decay. But if I'm day trading in a couple of different positions, let's just say I was in this that Merck position that Mitch had, this TWX one, and let's say Pfizer. I'm really just setting my targets up and just kind of watching my P&L to hit my target for the day, and more so if I have let's say you have a daily target of $300. If you hit your 300, I don't particularly like going for higher than what I want to make per day. I kind of find majority of the time, and different traders have different thoughts on that. I really prefer if I hit my daily goal. All right, so mine's between 300 and 500, let's say. Then if I hit $500 for a day, I don't really see a need to go and try and get another $100, another $200. I feel like I just wind up losing more of that goal that I had. So that's one of the ways I do it. And if, let's say, I'm swing trading a couple things and I plan on being in some positions for a week or so, I'm kind of more watching the risk than I am the P&L. I already know what the target is and how much money I expect to make. It's just it really all depends on speed. If I can get the majority of what I wanted in 2 days as opposed to 5, I have a little bit more of a penchant for just taking it off. Because there's just unknowns. So hopefully that answers your question. All right, so TWX backed off a little bit and then just popped again. So let's see. I'm really curious to see if this gets up there. So let's see if it can break higher. Let's check on that Dow trade. Oil's heading higher. Give me a second. I'll look down. Looks like it backed off a little bit. All right, so it's kind of playing around a little bit if you didn't take profits on this first target. What I'll basically do is, let's just say that this is futures trading contracts, right? So if I get into the trade here, and my first target was, I think I said right here, right? Let's say your first target was up there. Then you would get out one contract here. You'd move your stop to break even plus, a little bit of profit, and then you would let the next contract run to this second target at 18,210. But this way, if it backs off all the way down to your stop loss, you're guaranteeing yourself at least 200, 220 in profit. And if you're going for that last $150, you don't take everything off the table. So that's kind of what I was trying to get accomplished there. But it looks like this is starting to back off a little bit, and if your stop is at break even plus one, you're looks like you're probably going to get stopped out unless it reverses here. And let's go back to S&P, still not getting near there, so which would help our Dow trade. Alrighty. It's fighting it. Time Warner here, so let's see. Let's see. I think you can do it. Let's just talk that. What the hell am I doing? Alright. Canadians still staying with us. The Dow didn't get down there yet. Let's just say your stop would be at 148 right now, so hopefully it breaks out now. Looks like Mitch said something cool. Oh, okay. So if you remember Pfizer, we were looking at that tiny zone, and then there was the zone above. Let's see. Put that in here. Okay. So here's that little nickel zone that got broken through, but now touched this. And you guys will see it wick touched, and it's kind of backing off a little bit. This has still got some nice room to go. We're going to use somewhere in here as our target one. Let's see, the risk on this is about 18 cents to make 40 cents. It's got just slightly better than 2 to 1, which is fine because we plan on being out of this trade today. And we'll keep an eye on this one too. All right, so the Dow's kind of just meandering right here in the middle. Let's see, just got to get higher. Oops. All right, so that's Pfizer. Waiting to see if that backs off. Merck was a home run. And Time Warner's just doing its thing, but it's doing the right thing. So let's see here. All right, so let's keep an eye on these. I'm gonna just take a 2-minute water break, and let's see how these work out. We could see entry on U.S. Steel as well today, but we'll see. So if you guys come up with any more questions, throw them in the chat box. Like I said, I'm just gonna take a 2-minute breather here. If you guys want to go grab some water, you need a pit stop or anything like that, go ahead. But I want to keep going until, let's just go another 10 minutes until 11 o'clock, and I'll see if I can do some wrap-up questions, anything like that. But we got these two really nice trades right here we're watching, this one long, this one short, and we'll see how they work out, and then we'll look at the Dow and the ES, and we'll call it a day. All right? Okay, we got two trades here. This one TWX seems to back off a little bit, or be backing off a little bit. Let's see. Doesn't mean it's over or anything like that. It's a nice wide zone. And Pfizer's back in the zone here at 33.90. Dow's just meandering right in the middle. I mean, the market's starting to slow down a little bit probably. So just need to reverse up into this area. Let's look at that S&P. Should be doing the same thing as the Dow. All right, it's trying. It's in the middle. You know, if we get into this top area on the Dow, that's just a little bit more money for us, and if possible, short on the ES. Let's see. These two trades are doing what they're doing, and as long as your position size accordingly, you just let them do what they're going to do. Oops, sorry, hold on. And then I just want to look at the pound. Oh, Canadian. Let's see here. Canadian. All right. Remember I said if it got below this little point here, I would start to feel a little bit better about this trade. Now, I didn't get into this trade. It's just so sloppy that this little zone here and some slop here, I just didn't, that was what kept me out of it. I thought about tightening it up and kind of getting in this vicinity, but I didn't. I just would have highlighted this whole area. So kind of came up. If you did, actually, this is a really nice trade going on right now because now you're at 2-to-1 here. Now, if it breaks below or could stay below this, we could look for this to be a major, a really nice sell-off, let's say, down into this vicinity here. I forget what Mitch, if you're listening, what did they change the increment to on Canadian dollar? From it used to be $10 a tick, and it was easy to do 10 ticks, $100. Is it 6.25 now? And if you're not there, no big deal. I was just curious. If you see my chart, oh, God, I guess he is. Oh, $5. Okay, no big deal. But this is a really nice trade here. So it's starting to move. All right. They sliced the tick in half. Okay. So it used to be $10. Now it's $5 per tick. Let's see. Starting to move. Let's say down here is going to be the ultimate target. Kind of came in, touched. Now, like I said, it's breaking below here. Then this should be the next stop. And frankly, it could go a little bit lower. Not my style of trading. I want to take the money and run. This is a couple $100 right here. You know, I want to take it. I want to, and I want to call it a day. All right, come on down. Come on down. Make me look good. Now, what would have made me feel a little bit better is if I actually made money off of this trade, but I didn't get into it. So let's see. What do we got here? Gotcha. All right, remember, if you guys were here for the beginning of Mitch's presentation, he was talking about the trading environment and that the indexes, you want them trading, you know, far apart from each other. Notice in this squiggly line stuff that the spaghetti chart, they're all starting to tighten up in here, right? That's a bad sign for the trading environment. Now, it's Friday. We have that going against us. It is going into 11 o'clock. Usually the market's still moving around 11. 11:30 is where it really starts to trade off for, really, to be honest with you, just people go to lunch. So it could be a little bit of that too, but wait and see. All I know is this was a phenomenal Canadian trade, and I didn't make $1. Son of a bitch right there. All I said, oh, man, nice trade. So let's see. Let's see. Just go see if I missed any questions. No. All right. Time Warner still staying above our zone, so that's good. That's a good sign. Looks like it's trying to get back up there. The trading environment's going to affect these two trades, I have a feeling. Pfizer's trying to move down. Let's see. We'll be getting a new candle. Oh, this is a 60-minute. Yes, we'll be getting a new candle. That'll tell a tale, and we'll see what happens there. Let's look at the ES is trying to move up a little bit where I want to look to short it. This Canadian I can't, oh, there we go. That was the target, guys. Look at that. So my thought process was if it could get below where it was kind of just meandering around, that it could fall because there's nothing to hold it up. And I was kind of right about that, but just didn't make $1 off of it. So what are you going to do? Be curious if it just keeps falling. Anyway, let's go to the Dow. Let's review that. All right, so the Dow on that second contract, remember I said if you put your stop at break even +1, never got there. So as it's trying to turn around, you're still in this trade and you're still about where you would have got out on that first one. So if you're going for that little bit larger profit, like I said, the top of this body here would have been, I think, $220 in profit, $220 for one contract, and this upper area would be about $320, I think, something like that. So if you're going for that extra 100 in this blue line, it has to get above these wicks here to really get there, I think, and then that will probably aggravate get us into that short on the S&P. Let's see. I'm kind of curious. All right, it's 11 o'clock, so let's see here. The hourly change is just, I don't want to say it's huge, but it can be. You know, if new candles form, kind of decides what it wants to do. So I just noticed there might be getting a little bit of volatility. I thought it might break higher, but it looks like it's actually doing the opposite. Let's just go over to these real quick. All right. All right, Pfizer's still doing its thing. Time Warner's getting a little bit better. It's on. It's moving. Let's see if it can just find its footing and just pop up a little bit. S&P is not really doing too much. You know, we'll see. It's mimicking the Dow, but I just like that short up there. All right, come on, start moving. Let's see. Canadian dollars obviously moving higher. This is just the inverse of that Canadian futures trade. All right, come on, Dow. Let's go. Give this another minute. Hang on, guys. I'm about ready to wrap up. I just curious if these last two trades start to get where we want them to. Come on. Come on. Start breaking it slow. Let's go. Okay. All right, Dow's trying to get legs. Let's see here. We need to get above 196. And then we can look to get out of that blue line. Let's see if the S&P leads. If the S&P does it, the Dow will do it. All right. It's kind of just meandering. Who knows if these will hit. I'm expecting Time Warner to hit that blue line. I'm expecting Pfizer to sell off, but you know, what do I know? That Canadian dollar trade worked out. I expect the Dow to hit this second contract trade exit here on that blue line because I think it would have sold off already if it was going to. See how it's trying to get up there? We'll see. So I'm going to put together, let me just make a note, and we want to send out, so for Karina and Stephanie, I'm going to be sending you the cheap stock info. And then I want to summarize that PFE and TWX trade, really just kind of let you guys know if they hit their targets and then what the YM wind up doing, the Dow futures. If it hit its second target, hit its first one, and then if we got short the S&P from that area I showed right at the beginning. All right, so this was fun. I hope you guys enjoyed it. I know we got a couple of new followers out of this. I'm glad Nathan put this together. Sorry, it was a little short notice. Maybe we'll try and do another one next week. I don't know if we have a class next week at our office, so might be kind of crazy. But if we can put another one of these together either next week or the week after, it'd be cool to do this again without just, you know, a day's notice. And, oh, here we go. Starting to move. Got above it? Yeah, it's going to hit that blue line, I think. I'd be curious to see if maybe we could give this a couple of days lead time and see if more of you get a chance to come in. I'll probably send out the recording. I probably will send out today, but more than likely be today, but possibly Monday. Let's go. Come on. Let's close out the session with this hitting its target. Come on. Come on. Let's see what else is going. Time Warner's moving, popping. Come on. Pfizer, do the opposite. Come down. Come on. Come on. Up. Second target. There you go. So you've got to target 1 for $200. You got to target 2 at $300. What did you make? $500 for the day. And the market's been open for an hour and a half. Call it a day. Go about what you want now. Hold on 1 second. My head, but You're very welcome, as always. Stephanie, don't worry about that if it went over your head. If this is your first time seeing this live, like you said, just let it flow over your head nicely. And then I know you're talking to Mitch, so just continue to do that, and we'll break this down for you into like simpler pieces. The idea of this is really just to expose people the way we trade. And for the group that Nathan put this together for, everyone's trading a little bit of everything in different styles, breakouts, indicators, all this kind of stuff. So the idea was really just to expose them to what my style looks like, or Mitch and I's style looks like. So this guy is starting to move. So, take it easy, take it slow. Watch the recording of the cheap stock thing, and then, we could talk more options and just the whole price action thing a little bit more. So you guys enjoy your weekend. I will try and, you're very welcome. I hope I'm really glad a lot of you guys are saying you enjoyed this. I hope it didn't go over too many heads, and you guys got to see some real trading and some real setups. And I will talk to a lot of you. Send me any emails, any questions, or anything like that at ptl@precisiontradinglabs.com. If you haven't done it already, check out my website, precisiontradinglabs.com. And right at the bottom, hold on 1 second, it'll pop up. You can actually sign up and you get a free report on this strategy. It's really good stuff. And I will send a little wrap-up message with some of the trades we're still waiting on, and we'll see if they did it. We now know the YM hit its second target. See if the ES gets entry on it. ES is, oh, come on, touch that line. See if we can get short this. Come on, get there. Anyway, you guys have a nice weekend, and I'll try and get this out to you today. If not, then it will be on Monday. And everybody enjoy. Take care, guys.